Good morning. You're watching Power Breakfast in the Mumbai News Center. I'm Sonal Bhutra. A fresh new week and a fresh new trading day as well. And we are wishing all our viewers a very happy, colorful and safe Holi as well. And let's check the color of the markets globally, because we did see green across the global markets. That's what US market showed as far as Friday's trading session and last week is concerned. For Asia, it's a mixed picture that we are looking at right now. Hang Seng is the one which is down around 0.1%. Taiwanese index is in the green, up around 120 points. So it's largely a mixed picture. We have Shanghai, which is in the red today. Straits also lower in trade. However, we have Nikkei, which is up 1.2%. Kospi higher by 0.4% as well. So it's a mixed picture. Red and green, both are the colors for the Asian markets. But for SGX Nifty, it is indicating that the start for our own markets could be well in the green. 70 points uptick is what it's showing. Maybe we will build on to the gains that we saw on Friday and might be able to sustain it as well. So that is something that we'll be tracking for you as well. But in the US markets, Wall Street ended Friday's session on a strong note. The Dow Jones closed with a near 390-point bump up. The S&P 500 closed 1.6% higher, while the tech-heavy Nasdaq ended 2% higher in trade. All three indices ended the week higher. The Dow Jones with gains of 1.75%, the S&P at 1.9%, and the Nasdaq capped the week with a 2.6% gain. Okay, on that note, let's focus on some important opinion coming in from Jeremy Siegel of Wharton School. Listen into what he had to say.
Jobless claims have been so strong, and this has really shifted the story. If we get anything like January, believe it or not, 50 basis points would be on the table for that March meeting. If we get less than 200,000, we get 100,000 or less, I still think the case could be made for 25. But when I look right now at Fed funds futures, I see them pricing in right now for 25 basis point Fed hikes. So with the strong data that we've seen on the job front has really changed the picture over the last 3 weeks.
All right, that's the global market action and opinion as well. How will these overnight cues impact our own markets? We have a research team joining in to tell you just that. The trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. We have with us Rima, Surbi and Mangalam. Hey guys, a very good morning to all of you, looking very bright on a Monday morning, and happy Holi to all of you as well. Rima, let me come across to you first up. What is the market setup looking like today?
Well, as you pointed out, the SGX Nifty is suggesting a positive start, carrying forward the momentum that we had in Friday's trade, the strength in the United States and the up move that we had on Wall Street on Friday, where the key indices gained 1 to 2%. And plus, there is renewed buying by the FIs. On Friday, the FIs bought about 246 crore in the cash market, but the DIIs bought big. They bought 2,090 crores. So net, we're looking at an institutional buy figure of about 2,300 crore rupees. So that's a big positive. Also, the fact that, China setting the GDP growth forecast for this year around 5% may dim some of the optimism of China, because it's come in lower than what the consensus expectations are. That said, despite the powerful rally that we had in Friday's trade, the markets are still very much within that band. What last move's price action is confirmed that maybe that low of 17,255 is an important low for our markets, at least in the near term. So that's where the support for our markets comes in. But at the upper end, remember, the markets have been struggling to cross that 17,850, 18,000 mark. So that continues to remain a resistance level. This is going to be an important week when it comes to labor market cues from the United States. So we've got a whole host of labor market data incoming from the United States. The big release is going to be the non-farm payroll data. That's on Friday. That's the February jobs data, and especially on the back of the January strong jobs data. This is going to be, very important. Does it sway the Fed's thinking? That's going to be tracked very closely. And also Powell's speech, the congressional testimony on Tuesday and Wednesday is going to be tracked. For the Indian markets, we're shut on Tuesday, so that's a reason for a big smile. And plus on Friday, we've got the India industrial production data. Before the day, I think some of the momentum is going to carry the markets higher, and that's what the SGX Nifty is suggesting. Back to you.
All right. Thank you, Rima, for all those cues. So that we'll track for you. But all the stocks that are in focus as well, Surbi is joining us with that list. Surbi.
Hi, good morning. Thanks for that. So few stocks that I'm watching out for today. The first one on my radar is Mahanagar Gas. The company acquires 100% stake in Unison Envigo for 531 crores. Next is Power Grid. The company wins bids for 2 projects in Chhattisgarh. Indian Energy Exchange reports its monthly volume data, and for the month of Feb, the total volume is 8,200 million units. Next is Zydus Life. The company receives final approval from US FDA for the drug Vigabatrin. This is to treat refractory complex partial seizures. And lastly, Bajaj Electricals. The company wins orders worth 565 crores from South Bihar Power Distribution Company.
Thank you, Surbhi, for that list. And finally, let me go across to Mangalam, joining in with all cues from the FNO space. Mangalam.
Good morning. So it was a strong day of trade on Friday, and key technical levels were conquered by both the Nifty as well as the Nifty Bank. The Nifty went ahead and conquered the 200-day moving average of 17,404. The Nifty Bank went ahead and conquered the 40,957 mark, which was the 20-day moving average. And after that, the rally only went up further. What was the reason that led the rally? There was a seller's strike. Both the FIIs and the DIIs, as Rima pointed out as well, together were almost 2,300 crores in the cash markets. But apart from that, there was insane amount of short covering in the Nifty. 8.3% open interest was compressed in the Nifty. 2.2% jump in the Nifty Bank, which is telling you that we had some longs as well as some shorts which were covered. The data confirmed that 3950 crore worth purchased by the FIs and index futures, 11,000 long additions and 31,000 short covering. And as a result of which, the FII longs, which were 15%, jumped all the way to 23%, and the shorts, as a result of that, compressed to 77% as well. Apart from all of this, there was a fair amount of put writing as well. That's telling you that there would be a fair amount of support at the lower levels that we just talked about right now. The technical important parameters, 2.57 lakh puts written by the FIIs. They've written 17,500 put. They've written the 17,600 put. And that's telling you that around 17,450 to 17,500 would be an extremely important support. 17,400 call writers had to cover their positions, and they're still active at 17,850. The Nifty put-call ratio is at 1.2. Usually levels upwards of 1.2, things start to get a little overheated, and that is something I'll be watching out for. The SGX Nifty indicates a positive start, but that's right at the 20-day moving average of the Nifty, 17,700. So let's see whether there could be a bit of resistance out there or not. If we break above that, that'll be extremely good. The Nifty Bank as well has its resistance at the 50-day moving average, 41,680.
Welcome back. You're still watching Power Breakfast on CNBC TV 18. Vedanta Resources founder and chairman Anil Agrawal is extremely confident about Vedanta's financial health. Speaking exclusively to CNBC TV 18's Nigel D'Souza, Agrawal said with $30 billion in revenue and $9 billion in profits, Vedanta has enough internal accrual to repay debt and even raise fresh funds. Anil Agrawal urged the government to divest its residual stake in Hindustan Zinc, saying the promise was made 20 years ago. Here's a slice of that conversation.
Now, the proposal of Hindustan Zinc to go ahead and buy International Zinc's assets, well, the government of India seems to have opposed it, at least as of now. But you have said, and your spokespeople have said, that you all are in discussions and best for the shareholders and for all stakeholders will be done. So what's the plan B out here? Will you be looking at a share swap, another way of getting this deal done? Is there a plan B?
I want Hindustan Zinc by itself. I'm thinking that the way the scope is, we can make it, Hindustan Zinc today is a $20 billion company. We can double it in no time.
Right.
We have, zinc is a scarce commodity, and zinc is required for today's environment because naked steel you can't use.
Correct.
You have to use galvanized steel, and we produce silver. Silver is a very, very important commodity for everything.
Yeah.
So we need to grow, and we got this asset which is under the same umbrella.
Yes.
Same umbrella. And today, how Hindustan Zinc is running? Because we have all the talent from the South Africa.
Yes.
We don't have mining talent. So we got all the talent from South Africa, and this hodgepodge, huge leakage. If you can put these two companies together, the company 2 and 2 going to be 6, not 4.
Right.
So that was the whole idea, because we have bigger asset than the Hindustan Zinc. We did a very conservative valuation. And the money which is lying in Hindustan Zinc, we are getting return of 2 to 3%.
Yes.
If we take South African asset, which is a producing asset,
right,
profit-making asset, if they put them together, the return is almost 17-18%. It is the right move. I'm saying why government has agreed that we will sell 100% share 20 years back. how much you hold us our leg not to run. They have to take a decision to disinvest this 29%.
Yes.
If there is a clear-cut agreement that they will be divesting to us with a particular formula, and government can get probably 50,000 crore, 40,000 crore, and they want to do it, but they have to accelerate. If they go away, then we can run our company. Company has to run by the board, not by the government.
Okay, all right. Those are some important comments coming in from the Vedanta Group's chairman as well. But moving on, our colleague Yash caught up with LIC chairman M.R. Kumar on the sidelines of the 22nd Global Conference of Actuaries and started off by asking about a crucial meeting with the Adani Group management. Here is what he had to say.
I can only confirm that the conversation has happened with the department, but there's nothing I can state as of now on the outcome of that meeting. But we have had the meeting.
Are you more confident than you were about a month ago on the business prospects, not the stock price, the business prospects?
I believe so. We are quite happy about the meeting.
Welcome back. It's time to talk commodities now. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning.
Hi, morning. When you look at the markets right now, we are reacting to a couple of things. One clearly has been the China meeting over the weekend, where we are looking at lower GDP setting as expected at around 5.5 to 6%. We've got 5% instead, and that seems to be weighing slightly onto the metal prices right now. So you have copper, which has come off. Last week was a good one because the Chinese PMI data was on a stronger side, but much of those gains really seem to be coming off into the markets right now. So not just copper, aluminum and zinc are trading slightly into the negative as well, and so is the case with the crude oil prices, which also have come off its high. Last week we were mostly trading above $86 a barrel, so holding below those kind of numbers right now. Also, it is about the UAE now not planning to exit from OPEC. That is news information that continued on over the weekend, but there is some clarity coming over that on Monday morning. So we've seen some pressure coming because of that as well. The only positive that the street will watch out now is the fact that the gas prices are above $3 a barrel yet again, and the China seaborne oil import from Russia is set to hit a record high yet again for this week, and those could be supportive factors in the market.